right, going live. All right, we are live. We are live. We are live. We are live. Okay, so my hair is all kinds of messed up today. All right. So, my friends, man, my hair. I'm having a really bad hair day. Cheese and rice. All right. I have to take. All right, there. I'm going to stop messing with it. All right, everyone. If you're here, thanks for being here. And now we are live. So I'm just waiting for my peeps to join the Zoom. I had some technical difficulties and it was all my fault. So they are really, really kind in joining. So we are going to look at stocks today. We're going to look at a whole bunch of stocks today. We're going to see if it's a investment, trade, neither. We're going to talk about it, do technical analysis, fundamental analysis, and the goal is to get a different perspective as to what's happening in the macro versus the micro, and maybe learn a little bit along the way. So let me look at the Discord, not the Discord, the Zoom. All right, in the Zoom, I have a few people. Okay, just getting through. Can you guys, Vic, I can see you in there. Can you hear me, Vic? Everything good? Brandon, everything good with you guys? Can you guys hear me? Man, technical difficulties suck. I'm having Zoom issues. I'm having OBS issues. I've had to restart everything. Headphones, AirPods Max, mic. Okay. Can someone say something in the Zoom so I know I can hear you? I can't hear you guys in the Zoom. Test. Oh, I know why. I bet you it's because I can't stream and Zoom at the same time. I guess I'm doing something that you're not supposed to do, which is Zoom. All right. Well, we're going to do it a little bit differently instead of delaying the kind people anymore. All right. So those of you in the Zoom call, go ahead and we can't. No, you can't speak on stream. I guess I should be able to Zoom, but I'd have to use a different mic. It's a technical issue where I overlooked at first, and that's on me. So what we're gonna do, I know who's who. So we're gonna go ahead and just if you guys can go to the, I'm gonna get out of the Zoom. Yeah, I'm gonna get out of the Zoom. I want you guys to just come to the YouTube only. Come to the YouTube only because going on Zoom and live streaming is impossible. All right, so let me give the Discord members a quick heads up. Okay, come to YouTube. All right. All right, so without further ado, we're going to go ahead and get started because I thought it was going to work. I thought I'd be able to Zoom and live stream YouTube at the same time, but apparently I don't have the technical skills to do that, but it's okay. It's okay. All right, Danny, Greg, G, everyone's here. Do I still have an echo? Uh, do I still have an echo, or is it clear? It should be clear by now. All right, no echo. Perfect. Let's go. All right. So Patreon people, we got some stocks that we're going to analyze today, and the first one is going to be a Meta. All right, so let me get Meta up here for everyone to see. We're gonna get some FinViz action. Okay, now I'm gonna go to sharing. All right, screen share. All right, here we go. Here we go. Yep, first stock up is Meta. Thank you, Phil. You're doing a freaking phenomenal job. All right, so we're gonna look at Meta. We're gonna look at Meta, both fundamental and technical. Let me pull them up on the good old trading view. All right, we're gonna look at Meta. All right, Meta, very big. I actually so first and foremost, what do we know about Meta? Well, Meta is down from peak to trough 74%. Okay? 74%. And from a trading perspective, has an RSI at around 24. Very, very oversold. Very, very oversold. Now, before I go into the fundamentals, and G, hats off to you because we were discussing this before, so I can jump right into it. When Meta fell off a cliff back here in February, right? It fell off a cliff, right? And you see, because this is when we first found out that they were wasting so much money on R&D for this metaverse stuff. What I want you to see is that it went to they're burning cash. They're going through cash. So, but let's look at February. In February, they also dropped to oversold, where they had a similar RSI. They had an RSI of about 22. And then I want you guys to correlate this, right? So it fell off the cliff, it had a RSI of about 22, and it just kept on going down. It went from $242 before it bounced up to $190, okay? And everyone thought over here that it was oversold and has to come up, but it didn't. So when you have the RSI going up as it did up here, right? It was cooling off, but you have the price continuing to go down. That is not good. That is called a divergence, right? RSI is not correlated to price per se. When you have a divergence between price and let me show you guys my face. When you have a divergence between price is up here, RSI is up here. So price is going down, but RSI is going up. That's called a divergence, right? And that is not good. That when that happens in an upward trend, that's good. But when it happens in a downward trend, that means that yes, RSI is cooling off, relative strength index is cooling off, but the price continues to go lower. So it's not really a good time to buy, whether for an investment or a trade, because that means that the stock is going through some stuff that will just make it go lower and lower. So an entry on either is not a good thing. So fast forward all the way to today, we went off a cliff again. The RSI is down again. Now, before I'm gonna go because I already know my answer for Meta. So Meta, in my opinion, is neither an investment or a trade. It's neither an investment or a trade. And when we look at the fundamentals, yes, the PE ratio is great. Yes, the forward PE is great, but that forward PE, I don't think is very accurate because Meta is. What do we know? We know that ad revenue is going to go down, and we know that their forward guidance has gone down, and we know if you listen to the earnings call that they literally have no time. They are not going to stop throwing money at this metaverse things, right? Their capex is going up while their free cash flow is going down. So without spending too much time on one individual stock, I'm going to say this. I'm going to say that I will not invest in Meta. And for those in the Patreon, that we started that $25 the $25,000 account to see if we can beat the S&Ps with the wheel strategy. I'm actually going to close the put that we wrote, and I'm going to be up maybe like 5% or something. But I'm doing that because I don't believe in Meta. I don't believe in Meta in the mid to long term. And I believe that investing or starting an investment in Meta now will just bring it lower. And because our account is only $25,000, and because at the $95 strike, it is going to have I believe, an over 30% position in our portfolio. I don't believe that right now is a good time to write puts on Meta. So there's that, just so you guys know. All right. Go to the chat, say hi to everyone. Phil, you said, "Hey, babe." That's funny. Okay. Okay, Danny. Yeah, yep. All right. We talked about Meta. All right. Next is Amazon. Let's talk about Amazon. All right. Let's look at Amazon. All right. Amazon, from a fundamental perspective, has a PE ratio of 92. Okay. 92 is really, really high in this environment. So, as great as a company as Meta is, or excuse me, as Amazon is, right there and there alone, I don't believe it's investable. But now let's look if it's tradable, because it may be tradable, right? I would also like to showcase one other thing. If you listen to the earnings report, Amazon dropped guidance going forward, right? So this metric right here, this earnings per share next year, cannot be accurate. It's probably not updated because the analysts haven't updated it. But this cannot be accurate because they dropped their estimates for next year. So I don't believe that Amazon just yet will be able to go in an upward trajectory. Listen, we're about to look at the technicals on Amazon, but I assure you that they are not in a upward trajectory. And when you're going to an investment, you don't want to, as they say, catch a falling knife. So Amazon, from peak to trough, let's see what they're at. From peak to trough, they are down about 44%. They are down about 44%, have an extremely high PE ratio, and literally fell off a cliff after last earnings call. Now, they've caught up a lot, but if we were to invest in it now, we are saying, Amazon is at a good buying point right now because they're going to start going up right now, right? And I don't think that is the case. So what we're going to do now is we're going to create some support and resistance lines. All right. That's one. And then I might have to use the weekly. Yeah, let's go use the weekly. Okay, I would say that another good support slash resistance. That's a lot there. Right about there. All right, that was for just resistance. Let's go back to the daily. Okay, so I see Amazon definitely being able to go below 96. And that's just in the short term. I do not think that the macro environment lends to a investment in Amazon just yet, but you never have to throw all of your money. So one thing I like to do is I like to look at a possible play. So here's a possible investment play because I do believe that Amazon is a great company in the long term. So instead of, let's say we had, I don't know, uh, X amount of dollars, right? We're going to look at a long term play. So let's say maybe the macro will change in about a year. So let's look at September 23 options. Make sure we're looking at the right chart. Amazon. All right. This is the option chain for Amazon. Okay. Now, Amazon as of Friday closed at 103.41. And I believe that Amazon, I think I'd be comfortable if they took a 10% haircut from these levels to invest. So a 10% haircut would be around $90, right? $90 would pay $8.70 if we wrote a put. That would give us a 10. So here's what happens. If we write that put now, that would give us about a 10%, close to a 10% rate of return on our put if it doesn't go below 90. So we make money if it goes up. But if it does go down to 90 or below, we'll have a cost basis of $91.30. So I do believe if you wanted to write a play, and this isn't a trade, this is an investment on Amazon, an investment on Amazon that would expire on 15 September 2023. A good position to take, in my opinion, and this is not financial advice, this is Gabe's opinion. It is not tradable, but it is investable, but only if we write a put at $90 because that'll give us a cost basis of $81.30, and a cost basis of $81.30 will give us about almost 20. We'll have a cost basis 20% lower than what they are today. So given that we're getting a cost basis of 20%, around 20% where they are today, I believe that is a good investment entry. Now, again, I will say that if I was doing it, if I had X amount of dollars to put into this, I would only do about 20%, 15 to 20% of my total investment in Amazon. And the reason for that low percentage, everyone, is because of the macro. The macro is looking so bad that I am not comfortable putting so much into anything right now. However, writing a put to get some kind of access to Amazon, a great company, at this point, at that strike price, I believe is good. Okay, so I'm going to go to the chat now and we're going to see what the next ticker is. All right. Okay. Greg agrees with me on Meta. Hit the like button. Thanks. Jason, as somebody that resells exclusively on Facebook Marketplace, I could tell you that every time they tinker with something, they screw it up. Their programmers suck and their customer service sucks. Jason, that is great. Great feedback. I appreciate that a lot. Because it's always hearing from someone who's in it, who's in that, instead of someone who's just looking at charts or looking at numbers. All right, next is Tesla. Hello, Mike. Welcome, Mike. Everyone, Mike Garcia. He was my old first sergeant when I was in the Army as a BLC instructor. Everyone, give a shout out to Mike. One of the greatest non-commissioned officers I ever worked for. Was a little bit of a short fuse, hard to talk to, even worse than me, in my opinion. But overall, great guy. Great freaking phenomenal leader. Leads from the front. All right, next one is Tesla. Let's look at Tesla. Tesla. All right. Tesla. TSLA. All right. Tesla. Let's look at let me get the fundamentals good with Tesla as well. Let's look at the FinViz. Okay, Tesla, right off the bat, we have a PE of 70, which has a lower PE than Amazon. Go figure. Now, earnings per share this year came in at 669%. That is great. And then earnings per share next year is set to come in at 42%. Now, I remember I was listening to the earnings call for Tesla, and it said that that they still expect to close out with at a 50% margin. They basically say that they're going to grow year over year. Excuse me, at 50%, which I don't see that happening in the macro we're going into. Now, there's a lot of bad things happening in the world, especially with China. And people will say, "Well, Gabe, that's only one that's only one factory. China's only one factory." But China, it's a big piece of the pie. And will they grow? Absolutely. Well, are they in the works of getting new gigafactories? Absolutely, they are. Now you have Elon, who is a big reason that people go into Tesla. Now he's become the CEO of Twitter, and I don't believe that that's going to take as much time as people think from his day, but it is something, right? So we have the Twitter drama, we have the China drama, we have the macro environment, and we have the high PE ratio. So from a investment standpoint, I will not invest at Tesla at these levels. Now, I believe Tesla can go as low as 150. So, if Tesla is at a PE ratio of what were they? If Tesla's PE ratio is 70. If you cut that in half, that's 35. To cut that in half, that means we need to cut their price in half. So that's about 115, right? 114. 114, I believe, for Tesla is a little bit too much, but that would still give them a PE ratio of 35. I believe Tesla will start getting investable again once it breaks the second support, which I have here at 190. I believe Tesla will break 190 in the months to come. And I know I'm not making a lot of friends saying this, right? But I'm never going to tell you guys what you want to hear. I'm going to tell you guys what I think. And again, this isn't financial advice. This is Gabe's opinion. This is just my opinion. I believe Tesla will settle anywhere between 170 and 150. I believe they are going to go down to around this level. I believe that 150 or 145 around this area is going to be a good support zone. I believe they can go all the way down there. If you're an investor, I know you hate me a little bit right now. I think long term they are a great company. But if you want my honest opinion, I think they have a little bit ways to go, and they'll be investable around this range. Now, last but not least, let's look at a good investment play, right? And you know me, I love writing puts. So if we were to write puts on Tesla, where would I write puts at? If I wanted to start an investment on Tesla, again, I'll start with the 15 September 2023 because I'll give it a year to go down where I think it's going to go, right? I think Tesla will go as low as 150. So if I were to look at what the fuck? Oh, here it is. Okay. So at the money is 228, right? If we were to write a put remember I said between 170 and 160. So let's go to 160, right? If I was to write a put that expires in about a year, I would get paid about $17.28. That would give us a cost basis of right above 140. It'll be 142.70, let's say. So I would get a cost basis of 142.70. That means that uh I'll get a pretty good cost basis, and if it goes up, well, at least I get $17.28 per share, which let's use the handy dandy options calculator that I love so much. Calculate what is it? It's like option. Damn, the damn options calculator I use, it always just pops up for me. Nope, not it. All right, it's amateur hour here. Options profit calculator. That's it. Okay. Options profit calculator. Here it is. We go to long put. We go to put. We put Tesla in there. Okay. We put right. We go to option chain. And we are going to go to September. Okay. And I said that we're going to go to 160 strike, 1727. All right. If we were to calculate that, okay, that's not bad. On our cash secured put, our max return on our risk, which is what we'll have to buy Tesla at, would be 12.1%. That is not horrible. Has an annualized risk of 13.8. Remember, the S&P 500 has around 10% annualized, compounded rate of return annualized. So our break even is 142.74, and you can't really pay too much attention to this because of the macro, but that's pretty good. So that is one way, everyone. That is one way to start an investment on Tesla. Uh, and I don't believe they're tradable right now because I'm a swing trader, and I don't believe going to the upside is something Tesla will go. So untradable and investable ish. Investable if you sell a put at a certain strike price, which is 160 in my opinion. All right, going to the chat. Um, hey, you know, Greg, there's so many different ways to invest. So if you are if Tesla is a buy, even if it's going down, and you just want a dollar cost average share, a little bit at a time, then that's fine. Remember, this is opinion, not fact. Everything I'm sharing is my opinion, not fact. Should I just sell Amazon stock to buy Tesla? Tesla might be undervalued here. Hey Kay, that's something you're going to have to decide with. I definitely can't tell you that. In the call, they have been talking of 50% growth of car production, not growth in general. Correct. It's production, and there's a lot of other metrics that's going to affect Tesla to the downside. But this isn't a Tesla stream, so we're trying to get through as many shares as we can. All right, up next is Marvel. Thanks, Phil, for keeping me on track. All right, so MRVL. I know nothing about Marvel, so let's go into it. Let's go into Marvel. All right, MRVL. Okay, I don't even know what kind of company Marvel is. Okay, so because I know really nothing about Marvel, we're just going to look at the chart. We're going to look at the fundamentals. And right off the bat, what I see is that they have no PE ratio. So with no PE ratio, now this instantly makes this a speculative stock. So now let's go to price to book. Price to book isn't bad. Price to book is 2.25. Okay, so if they are trading at $41 a share and their book value is 18, a good rule of thumb if you guys want to apply this to your notes or to your brain. Whatever the book value is, you usually want to take away between 25 and 35% off of that, because if it comes down to the company is liquidating everything, they're probably going to get less than what the books say they're going to get. So 25% of 18, let's just round it up to 20. 25% of 20 is is uh is uh is basically, well, 20% of 10 is 40. So $4. Take out $4, well, 3. So they're really worth around 15.25. Their book, the realistic book value is $15 of the 40. So you can see that this company, if they were liquidated tomorrow, would sell at $15. Okay, so just that's food for thought, because this is speculative, right? I'm not saying Marvel is going to go out of business. I'm just saying that's what I look at when I do these metrics, right? Now let's look at the chart for Marvel. Okay, all right. From peak to trough, let's see what they are at. Okay, from the top, they have de-risked 56%. They are now at the same price that they were in 2020, right? They are now at the same price that they were in October of 2020. If I were to make a support line on this speculative company, uh, that's one. Now they've dropped below everything, so now it's just free falling. So if we were free falling, that'll be second. And then third for safety will be right around here, not the top, not the bottom, right in the middle. Okay. So, yeah, this is not good. This is not good. I see worst case, or like I say that it can technically go down to $25 a share. Will it? I don't know. I don't know anything about their business. I'm just doing a really quick. So I could see it going down another 50%. Although we could say that it can go another about $10 from here easily, and then be somewhere in this range. This range, in my opinion, is the only time it's investable. So that'll be anywhere from $32 to $25. That was pretty easy, quick. So yeah, since that went so fast, are there any questions on anything I just did? Remember that is just basically using technicals and fundamentals from a snapshot point of view. I am not saying I know anything about Marvel, so if you like Marvel, I didn't mean to disrespect you. I'm just doing a quick snapshot, right? To answer the question, if it's investable, no, not at this time. Is it tradable? Nope. I can't trade that stock on this. I mean, I could short it, but I'm not comfortable shorting it because it's so close to support. The only thing I'm comfortable shorting is the overall index, so the S&P 500 or the Nasdaq. But I wouldn't short it here. Also from let's look. I didn't even look at the RSI. Let's look at the RSI. So the RSI is approaching. So it did a nice bounce back. It went below the support that I set here. It went below that. It got all the way down to 35.29, and then went all the way up to 42, but then has averaged down closer to the 21 EMA. Yeah, the RSI is about 48, so that's about fair value. So it's neither a trade, it's neither to the upside or the downside for me personally, but I'm a swing trader. I don't like this setup, so I would stay away from it. And from an investment perspective, if I liked their business, which would take a deeper dive into fundamental analysis, in my opinion, only in this area would it be investable. But again, this is my opinion, and opinions are like assholes, everyone. Everyone's got them. All right, let's go to the chat, see what you guys are saying. Nano Dimensions that produces chips. Hey, Captain Chuck, don't they build machines that produces chips used for prototyping? Is that I've heard of Nano Dimensions. Are you asking me to add Nano Dimensions? Because Phil has the next up. All right, next up, I see we have a blue chip stock. We have a blue chip stock in American Express. All right, let's look at American Express. Thanks, Phil, for being my Johnny on the spot with the data. I appreciate it. AMX. Is it AMX? AXP, sorry, not AMX. There we go. American Express. All right, this is the chart. Let's start with the fundamentals first. Okay, American Express. Okay, everyone knows American Express. I believe that they are a great credit card company, better than Visa and better than um, MasterCard, in my opinion. Let me tell you why. From a consumer's standpoint, they are better than Visa and MasterCard. American Express is very hard on the retailers. So if someone steals your credit card and goes on a shopping spree, they will literally instantly give you back give you back your money. Like they will not pay the retailer. So it's the retailer needs to make sure that when using American Express that you're the person. That's why not as many people use American Express, and it's not because they're a bad company, it's because they are for the consumer. So that's one thing I know about American Express, but let's go strictly fundamentals. Okay, so their PE ratio is 15 and they have a forward PE that's going down. That's good. But then you got to put into consideration the macro, right? Where are we going? We're going into what's, in my opinion, a pretty bad macro environment. I think rates are going to continue to go higher. And I do not think this is the bottom of the stock market. But again, this is not financial advice. This is my opinion. If you are here, this is for entertainment purposes only. And you are here because you either value my opinion or you get a good laugh at my opinion. Either way, I appreciate your presence. So let's move on. Okay. Their fundamentals are looking good. Let's look at their chart. Okay. They, however, have also come down quite a bit from their all-time highs. Okay, they made quite a run. Okay, so from their all-time highs, they are de-risked about 25%, so that's good. They were all the way at 34%, all the way down here. Their lows are 131. They're at 150. They're at 150. This is an interesting chart. Lower, lower, low, lower, low, lower, low, but barely. Okay. Let me make some support and resistance. Oh yeah, they got strong support back here. Okay, that's good. That's bullish. So we got to move this up there. That's about better. Okay, American Express. Right there. On the top of the 21 EMA looks good to me. All right, so these are the levels for American Express that I see. I see 125, which is not too big of a haircut from where it's at right now. This is a good company. Do they have dividends? I didn't even see it. Okay, yeah, they have a small dividend yield. So they have a small dividend yield of 1.38%. Okay, that's not bad. Okay, let's get to the good stuff. Would I start an investment here? When I go down to RSI, this is the only reason why I would not start an investment here because I like good deals, and this is not a good deal yet. So I am looking for a retracement. If it ever comes down to a retracement, depending where that is, I would consider having a small. This is Zach. This one's for you, Zach. This is screaming Zach right here. Zach, I think that American Express would be good for you since you're a long-term quality company type of person. Zach, I think that up to 5% of your portfolio, if you do individual stocks, would be good in my opinion. If I was Zach, that's what I would do. 5%. But you of course, you know me, Zach, I would start my position by writing a put. And I would write a put no higher than 135, maybe even 130 about a year out. So let's see what that would pay. Let's see what that would pay. Okay, so they don't have they don't have September like the others did, so we have to go to January. So you have to go to January 2024. So if we're going to go to January 2024, I'm going to be a little bit more picky, and I am going to go. Yeah, I'm going to go with the 120. I'm going to go with the 120, which would give you $8.62. This is 19 January 2024 with the 120 strike. If we were to go to my handy dandy calculator, okay. Tradable? No. Investable? Depends. 120 strike. All right. The numbers aren't great, but this is a blue chip company, right? So the numbers you would get is you'll get an annualized rate of return of 6.33 on your money. So if it doesn't get filled, if it doesn't get exercised, that money is yours to keep. Okay, the maximum money you need in your account to do this cash secured put is $11,137. So that's a lot of money because remember options are 100 shares at a time. Your cost basis will be 111 if it does get exercised and go lower, which I don't think it will. So I think this kind of a play is good to either get shares of a great company or get, you know, 6.33% annualized. Now, $10,000 of that, before I would do this play, this is just food for thought for everyone. If you notice there, it's less than 9%. And if you go into a certain government bond right now, you can get over 9% on your money a year because of inflation. So every household can do up to 10%. So before you do that play, I would do the bond play. And then if you still have money and you're looking for a blue chip stock to put a certain percentage of your portfolio in, then American Express at a 120 strike is something that I like. Okay. What about companies like Disney and AT&T? We'll get their ARQ after all the Patreon. My Patreon members they put stocks they wanted me to look at today, so we have to go through all of those before we can go through to the chat. But we're going pretty good. All right, next is NEM, Newmont Mining Corporation, production and exploration of gold, also copper, silver, zinc exploration. Oh, Phil. You're the man. I love the way that you're giving me this info. Thank you, Phil. All right. I am liking Newmont, and I don't even know I don't even know what they're into yet, but let's look at them. This is good. Let's see how they do. Okay. In case you guys don't know, I'm very, very bullish on gold and silver going into the macro environment. I believe gold and silver are going to explode once the dollar starts to come down, because the price of the dollar is very, very high and it's going to stay elevated in this macro. But once at some point, I don't know when exactly, the when it does pivot, I think gold and silver, once the dollar starts to go down and we're at peak fear, because remember the economy goes is different than the stock market, then I think gold and silver are really going to take off. Okay, so they have a PE of 45, not great. They have a price to book of 1.59. Okay, that's good. That means they're very close to having an even price. They're very de-risked. I'm liking this so far. And this chart is telling me heavy consolidation. This chart is telling me, I haven't even looked at the advanced chart. This chart is telling me that they are near a bottom. I love heavy consolidation. Heavy consolidation is a great place to start wheel strategy, in case you guys didn't know that. And if you don't know what wheel strategy is, look it up. But basically, what it is, it's writing a put, getting the shares, writing covered calls, losing the shares, writing a put, getting the shares, and round the weird go the wheel goes. Okay, Newmont. All right. All right, look at this heavy consolidation. Okay, so right off the bat, we know where to write our support at, because we have a triple bottom there. Boom. Support is at a 39.93. All right. We got support at 39.93. Okay. Now let's go back a little bit. For this, I got to look at the weekly. Let's look where the weekly support is at. Okie dokie. Wow. Yeah, very cyclical, very cyclical. But I think we are near the bottom of a gold, copper, silver cycle. I really, really do. Again, this is not financial advice. This is simply my opinion. Okay, we're gonna take the averages of this 21 EMA and go right about there. And then very, very strong support will be there. All right. So I think the bottom for Newmont, in my technical opinion, is around 32 bucks. Is around 32 bucks. Now, if we were to look at an option chain for Newmont, if we want to play it safe and we want to write puts on Newmont, ticker symbol NEM. Ticker symbol NEM. Okay, leaps is the only way that I like to do my investment. So 229 is too short, so we're going to have to go to January 2024 again. Leaps. And what did I say? What did I say the bottom was, in my opinion? I said that the bottom was 32. I said that the bottom was 32. So for Newmont, because I'm extra bullish on Newmont, my strike price is going to differ from the way I did it. Okay, I said 32. All right. So 32 is my man. You get paid almost nothing. $2.86. 32.50, $2.86. Let's go to the calculator. Find it over here. NEM. they have a dividend? Oh, look at this, guys. They got a 5% dividend. Okay, that actually changes things a little bit. That actually changes things because an investor, when writing a put, needs to take that in consideration. Okay, so because that changes things, I need to do this again. Okay, because of that dividend, I am actually going to bump it up 2 strikes to 37.50. 37.50 will pay $4.62. All right. $4.62. Let's go back to the thing. Okay, I'm going to pick January 2024. And I'm going to pick the 37.50, which is just saying, ding, calculate. Okay, so it's not bad, guys. It's not bad, and you don't need that much money to do this play. So this play will cost you for a cash secured put $3,287. Okay, it'll give you an annualized return of 11.5. Because this play is more than a year out, we're getting 14.1%. Remember, you do not get dividends when you're writing puts, but the reason we raised the strike to 37.50 is two. One, because I believe that we're near the bottom of NEM, and two, I still want a cushion of support. And at 37.50, we are getting that cushion because the price of Newmont is $42.86. So $42.86, and we are getting it by selling our put. We are getting it at a cost basis of $32.87. That's because we're selling it out of the money, writing a put below $42.89, which gives us a cushion error. We're getting paid for that error of cushion. We're getting paid an annualized rate of return of 11.5%. And by the way, if I'm wrong and it goes lower, our break even, meaning our cost basis for owning this stock, will be $32.87, which is $10, almost, well, $10.02 lower than what it is today. So if I am wrong and it continues to go down, right? Our costs, we lose no money. As a matter of fact, we get to enter this company at a $32.87. But if I am wrong and it goes up and our put does not get exercised, meaning we do not become the owner of it, that means we just realize an annual rate of return of 11.5%, which, mind you, everyone, is better than the S&P 500. So NEM is the first stock of the day that I would highly recommend an investment in. It won't cost you too much money, and it beats the S&P 500 over the past 94 years. So that was an interesting find. But then again, this is my opinion. I am very bullish on metals. I believe that because they are cyclical, as you could tell by the way that the stock goes up and down, they are very cyclical, and I believe that we are entering, or will soon be entering, the bottom of their cycle. So good find on NEM, whoever said that one. All right. Next is N-Mode, requested by Vic, Medical Devices. All right, N-Mode. Oh, thanks, Phil. Thanks. This is a fun stream to do. And we're almost approaching an hour, so I guess we're gonna go longer than I thought. What I'm gonna do is I'm gonna try to get through as many as all of the Patreon requested tickers, and then I'll do some for the YouTube for the YouTube chat that was here, and you know, that way, it's my thanks to them for even being here and giving me a watch in the first place. All right, so next is In Mode. All right, In Mode. Let's look at In Mode. Let me get that ready here so I don't have to type it later. INMD. Okay. INMD. Here, INMD. All right, and mode. Okay, all right. So, no dividend, a decent PE ratio, but I don't really know. I don't know what the average for N mode is. I don't really know much about them. So this is just going to be strictly on the fundamentals. Okay, decent. Okay, here's what I do know. Right, here's why I like anything that's about has to do with medical things, whether it's medical devices or like medical companies or biotech. They seem to do very well during recessions using history as a guide. So there is that. Okay, they have no debt. Their price to book is pretty high at 5.71. Their book value per share is $6.18. Take away 25%, but we won't. We'll just use it for that, 618. All right. So of the 35, their book value is only worth $6. Okay, good to know. Good to know. Their quick chart is less than great. This is actually a bearish signal. This but I'll wait till I look at the thing. Okay. Earnings per share this year 115, no dividend, 115% earnings per share. Their next look how it's going down in the next 5 years. In the past I did. Okay. So see, here's a good example of why you shouldn't put this going forward. We're going into a recessionary environment, and I believe these numbers are actually going to be better than what it's portraying. You could say experience is guiding me that way. So I think they're going to do better. I haven't done a deep dive on the company, but medical does better during recessions. Okay, here's my very first thing. Look at that RSI 60, untradeable and investable at that RSI in the short term, like buying shares, but it's not uninvestable by writing puts. But let's look at it. And again, Phil, since you're right, NEM was yours. I really like it. Definitely putting it on my watch list. INMD. Okay. Okay. I guess they're also a fairly new company. What the hell does this dinosaur mean? Oh, I don't know what this dinosaur. I've never seen that before. That's funny. Okay. Um. Okay. This is the weekly. So when did 2019. Okay. They rose up to parabolic heights and then corrected to here. Okay, so they are down 64%. So they are de-risked 64%. Let's go ahead and put some handy dandy support levels on this mother effer. And then this is the last one I'll do right here. I try not to do more than 3 levels of support because then you're just being retarded. That's just like too much. All right. So, N mode has support to the downside where we're at. So its next level support is about $8. It's very volatile stock. Like, why did it shoot up back here? Why? I need to know that, right? I need to know the why, right? And then it shot up, looks like short covering, right? And then retraced more than 50% of the way down. That's bad. That's bearish, right? So now it's retracing upwards. So I see a retracement to at least $27 happening. I really do. I really do see a retracement to $27 because I don't know much about this company and they're so young. However, There's a however. The however is their PE ratio is not bad. They have an amazing PEG ratio. PEG ratio is price to earnings to growth, right? So their their PE ratio is lower than it should be compared to their growth. So, man, this is a tough one. This is a maybe. This is a good one. This is a good one. Anything with a good PEG ratio and going into the macro, okay, I'm flip-flopping a little bit. I'm changing this to a I need to do a deep dive on this. So I'm not gonna make an assumption right now. I need to do a deep dive on this. So Phil, do me a favor, add this to notes for me to do a deep dive. End mode. I need to do a deep dive. So Vic, this was interesting. Good find. I'm gonna go to the next one because this is an interesting one. This is interesting. All right, Phil, what's the next one? QCOM. Oh my God, QCOM. QCOM. When I was doing my deep dive on Netlist, QCOM, I had to do deep dives on QCOM because it's so similar to how, because if you don't know, QCOM sued Apple for a long time and then won that. Okay, QCOM. All right, QCOM PE ratio of 10. They are in the semiconductor space. Okay, I know because I've done deep dives on them before. Is that they basically take money from any cellular, like from T-Mobile, anybody who makes a phone or sells phones or anything. They will take some portion of those profits. So I can't wait to look at their chart and see where they're at. Okay, so they have a PE ratio of about 10.5. They have a nice dividend of 2.5. That's a decent dividend. They have a price to book of 8. That is not good. That price to book means that it just means that they don't have a lot of assets compared to their debt, but doesn't mean that they don't make money. They have a great PEG ratio. Remember, everyone, I want you to remember this. A PEG ratio under 1 is good. Okay, one is really good. Under 1 is great. So just remember that. So they have a great PEG ratio. Let's look at the chart and see how much they've been de-risked. Okay, from peak to trough, where they're at now, not trough, but where they're at now, right? They have been de-risked about close to 40%. Okay, close to 40%. They are in still an overall direction on trajectory on the weekly. Let's look at them on the daily. Wait, before I go to that, let's do their support lines. Okay. I'm gonna just do 2 for them because those are wide. Because they ran up. They created a gap, and gaps can be filled, so it doesn't. So let me look on the daily. Yeah, look at this gap they created. That scares me because this gap means that it would be filled. Once it fills this gap, then I believe it can go to the upside again. Okay, that gap scares me. So because it has that gap there, I definitely think that this is going to be broken because they are on a downward trajectory in the short to midterm, right? So 108, and then this gap is at 93. All right, so if we use that gap as a starting point for our investment thesis, $93, we can go to the good old over here, look at what it's paying. Okay, the price, select option. All right, and let me see, April, June. Okay, we're gonna have to go to January 2024 again. Okay, $93 they don't have, but they do have 8. But they do have a okay, we're gonna go to 95 because of their 2.5% dividend, right? So a 95 strike will give us a cost basis of about $85. Okay. And if we look at the chart, where is 85? 85 is right here. 85 is right here. And that is below a very strong support area. That's 1, 2, that's 3 levels below. I like that as a play, right? But remember, when you write a cash secured put, that money you're basically putting it on the side. So take that into consideration because you have two scenarios and only you know what's best. So either best case scenarios it doesn't get filled, it doesn't get exercised, and if it doesn't get exercised, then if it doesn't get exercised, we make 9.93% annualized on our money, and that's on par. That's on par with the S&P 500. So boom, check mark in my opinion there. If it does get exercised, okay, meaning we get to own QCOM at a cost basis of 84.70, we have now entered a company with a peg ratio of less than 1, a very strong PE ratio. I mean, I think realistically speaking, I think that if you write a put that low of a strike, you can just say congratulations, you made 9.93% because I don't see QCOM dropping to that level. Although technically it can because of this gap that it created on the daily. This has a very strong chance, right? But it doesn't necessarily mean it's going to happen. Or it can go down before a year happens, fill it, and then come back up. And then you won't get exercise at that point either, because when you get exercise, it has to be on expiration date. So there's that. So QCOM is not tradable, but it is investable, in my opinion, at the $95 strike, which will give you a cost basis of, what was it? Because I don't want to lie to you guys. A cost basis of 84.70. Boom. QCOM. That was interesting. Okay, thanks, VC. I'm glad you like the info. Yeah, I'm definitely getting into Palantir, Suhail. Palantir is coming. It was requested, I promise you. Pam, requested by Tim. All right, Tim, if you're here, we're doing Pam for you right now. Let's set it up. Pam. Look over here at the fundamentals and go into Pam. Tampa Energies. Energia. That means it's not an American company. Okay. Interesting. Oh, it's energy. So you got to be bullish on energy. I'm very bullish on energy going into the cycle. I'm bullish on energy, medical, lithium, Palantir, and gold, silver, copper, etc. All right. Great PE ratio. Holy macaroni. This might be something to look into, guys. Great PE ratio. Their price to book is almost 1, which means its assets versus liabilities are almost the same. Like the market cap is almost the same. It has no dividend, but obviously with these numbers, you can't have a dividend. Kind of reminded me of Zim, except Zim throws it over. Zim is put over the top because of its dividend. I'm still bullish on Zim. Very interesting chart here. Very interesting chart, creating higher lows and higher highs. Okay. Very interesting chart. All right, let's go to the chart. It's okay, Cameron. Nice to have you here, brother. Thanks for being here. Okay, so this one is Pam. Pam. Frank, writing a put is the exact opposite of buy a put. When you buy a put, you are bearish on whatever you're buying a put on. When you write a put, you are bullish. You are basically saying, I want to buy shares of this company if it reaches this strike price. When you write a put, you get paid to own a company. When you buy a put, you pay to short a company. You're basically saying, I am paying you this money right now because later I think it's going to be even less and I'm going to make money. So, yeah. Okay. So look at Pam, guys. Instantly on the daily, what are you seeing? Because what I'm seeing is upward trajectory. What I am seeing is upward trajectory. Now, would I trade? No, because we are approaching overbought. Would I put it on my watch list? Absolutely. Phil, make a note, put this on my watch list, please, sir. Or actually, I can just put my own damn watch list right here. Stupid. What was the other one? I'm just gonna add it to my own watch list. What was the other one? I had Pam and I had what? I think it was the one before that. NEM, right? I think it was NEM. Come on. Boom. Adding. Okay. Got it. Yeah, I wanted to look at J&J. All right. Okay. So now this is a very good chart. This is definitely investable and tradable. However, tradable in the sense that I would write puts, and also investable in the sense that I would write puts. So, first off, actually, let's see at what let's create some support and resistance, right? So, we're gonna have to go up here and create a resistance. This is a double top, so we're gonna create this resistance level up here. It might get there. It has to break through that double top, right? So I do not want to necessarily. Um, it's approaching, guys. It's approaching that double top, right? And then put it right there. This is another resistance. These are two resistance levels to the upside, right? This is the first stock that we're doing that has resistance to the upside. Okay. Now, support. Where do I see a good support where I want to write my put at? Because I don't want to pay too much for a stock that I think is going to go up. All right, that's what you do when you are a trader or an investor. You want to know where you don't want to pay too much for something. This is interesting levels here. Okay, this is going to be subjective. Okay, I'm going to write right here. Right here is a good level of support, for my opinion. All right, let's go to the weekly to see if it tells me a different story. Okay, there's another level. Yeah, this is a very strong level. Okay. All right, let's go back to the daily. All right, my friends. All right. All right. All right. That's too low. And can I write it crooked or what? Here we go. That's too low to trade or invest. I'm not going to get shit if I write a put that low. So I guess my only level to write a put at is 23, 25. Let's say 23. All right. Let's see what the calculator says. Okay. There's not much liquidity. So this is not like a trade that you can get in and out of. So remember, if you write a put on this, You are doing it with the purpose that you want to own. This is not a trade. This is not a trade. This is an investment. Um, let's go out a couple months. Let's go out 6 months. 6 months. And what did I say? Yeah. Liquidity is too short. The best we can do is we can do $20, but that look at that. Look at that bid to ask. 5 cents to 173. In the middle of that. No, excuse me, 5 cents to 340. And once that bid ask spread, that's too wide. That's not good. You want a tighter bid ask spread. Because this doesn't have a lot of liquidity, the bid ask spread is poor. So because the bid ask spread is so bad, we actually can't write puts on this, guys. You can't write puts on this. So let's go back to all right. So the only way to play this is with actual shares. The only way to pay this is with actual shares. And I would not buy it because the RSI is too high. So my final answer on this is wait for RSI to be below 50 and then start a position if you are bullish in energy as I am. This would require a deeper dive into fundamentals because I don't know shit about this company. So I'm going to have to do some deeper dives. But so not tradable right now and not investable via puts. And because it's has such low liquidity, you need to do your own due diligence because liquidity is matters, guys. Liquidity matters, right? Liquidity matters. It has, it has a decent market cap. It's over 2 billion. So yeah, final answer is good stock, good numbers. Well, I don't know if it's a good stock. The fundamentals are good, right? The PEG ratio is great. The PE ratio is great. The RSI is less than great. It's approaching its level. So maybe if you really liked it, start a small position. Don't go balls to the wall here. See what it does. Dollar cost average in. If it goes down, I myself would wait for a cool off on the RSI before I make a move on this because you can't write puts on it because there's no liquidity. All right. What's next? I did end mode already. Phil. Cameron, I will do DE after I'm done. I think we're almost done with the Patreon requested tickers, and then we're gonna go to the YouTube requested tickers. All right. Okay, PayPal is next. Okay, well, PayPal, I'll tell you right now, uninvestable and untradeable, but I will look at it anyway. I don't like PayPal. Do not like it. All right, PE ratio in the macro, garbage. The deep dive I did on them makes them garbage. PEG ratio, garbage. Forward guidance, garbage. Not liking, not liking. Let's go to PayPal or let's go to the techs. Okay, so this is another one of those fucking just crashed, right? Reminds me of Facebook. All right, Facebook or PayPal has come down 71.45%. All right, now let's look. Let's do some. Here's the bottom. All right, that's the next support level. RSI on the daily is about fair value, so not great, not a bargain. We like bargains. Okay. Jesus. Look at this, guys. They have literally Not now. They are above it now, but they for a point there went below COVID lows. All right. That's what fucking Meta did, right? And Meta is not looking great. So, we need to mark the COVID lows just so we understand what's going on. Those are COVID lows. Okay. Now we need to go to the weekly. Ugh, Jesus. Disgusting. Like, guys, I have to go all the way back to fucking 2017 for support. So uh, I can't really tell you what support below this is. I can't. I can't tell you that. That's not a good thing. That's a bad thing. So, um quick answer is untradeable, uninvestable in my position. I would, or in my opinion, I wouldn't even sell puts. I wouldn't even sell puts at $69 or whatever, or $70, because it could go lower. And that's it. That's it. Sorry. Sorry. Not I wouldn't touch PayPal. All right. All right. Palantir is next. All right, let's do Palantir. Oh, I guess it wasn't supposed to be. Wait. Okay. Sure. All right. So Phil, do I do Palantir or do I do AMD next? Okay. Palantir it is. All right. Just so everyone knows, I'm very partial on Palantir. I believe that they will go. My rationale is I believe that they will go inverse the market once the market hits. At some point, the market's going to go down and Palantir is going to go up. Right now, Palantir is doing whatever the market does. All right. So take everything I say with a grain of salt. But ultimately, I am very, very bullish. So I'm going to give you my bullish thesis on Palantir. So Palantir is speculative. They have a PE ratio of non-existent. Okay. So obviously they have no peg ratio. Okay. Their price to book is kind of high. Their price to sales is kind of high. They have, their forward free cash flow, or the like and guys, here's what you need to look at: the rate of their growth. When you buy Palantir, it's because you believe that they are close to the bottom and they're going to grow exponentially. That's what you need to do when you do any speculative stock. And as such, a speculative stock, if you are a investor like Zach is, you should not put too much of your total asset value into it, because it's speculative at the end of the day. Unless you're like me in my Roth IRA, it just goes balls to the wall, because that's just how bullish I am on Palantir. But don't follow my lead. Do your own research. But from a fundamental perspective, if you buy it, you're buying it because you think the growth is going to be great. And we know that they have achieved some really great things as of late, and I think that their next earnings, I think they're going to blow it out of the water. I think they're going to do really good. So I'm going to buy some short-term calls as a gamble. Remember, this is my opinion and not financial advice. I don't even need to look at the chart, because this is basically what the chart is going to show us. We know that the bottom is around 640, and I already know what I would do, and not what I would do, what I am doing. So let's look at Palantir. So Palantir is 865, right? And if you weren't I'm going to buy shares now and just hold forever kind of person, if you like to buy a deal, right? Then I would highly recommend writing puts at the 7 or the 750 strike, right? And what that means is that you get paid to buy Palantir at $7 or 750, right? And I'm going to show you what you get paid here in a second. Now, there's another way to pay Palantir, which I haven't discussed as of yet, and that is called a synthetic long play, right? And I'm going to show you that after I show you the put version. So on the put version, if we write a put in order to own Palantir at a lesser price, that means we're getting paid to own Palantir, okay? We want to write a put that expires, let's say, um, because Palantir has such growth, we don't want to write it in like a year. We want to write it in like 3 months or 6 months. So let's do March 23. All right, if we write a put that expires in March at a $7 strike, we are going to get paid 62 cents, right? If we get paid 62 cents, that means that our cost basis for Palantir will coincide with the all-time low at 653, right? That's the all-time low, 653. So if we get paid 60 cents at a $7 strike, we're going to own it at 638, which is lower than the all-time low. So that's good, right? So let's see what we are the two ways. So it'll cost us $638 to control 100 shares of Palantir. We will have a break even of $6.38. Now, we are going to get paid $62 per for putting up $638. So if Palantir is above 7, we are going to get paid $62, which return on capital of 638 is 9.72%, which is on par with the S&P 500. Now, the annualized rate of return is far above, but annualized, the reason that this is and this are different is because we're only doing it till March. If we were to do it until November of 2023, then the annualized return will be on par with what the return that we're getting on our capital is. But we're only doing it for 6 months. So if Palantir goes down and we get exercised in March because it's under $7, our cost basis will be 638. But if Palantir goes up, right? If Palantir goes up, then we lose all the upside, right? So then that means we don't get any upside. But now, what if we did something called a synthetic long, right? Now, let me show you a synthetic long. In order to show you guys a synthetic long, we have to look at the option chain together. Okay. So now I'm going to show you guys 3 things. You guys are definitely going to learn something. We're going to use March 2023. That is exactly 138 days from now. So 17 March, 138 days from now, I showed you guys how to write a put, right? If you write it at $7, you'll get paid 62 cents, right? Now, if you today buy 100 shares of Palantir, you will pay $8.64. So it'll cost you $864 to own Palantir as of today. And then whatever it goes up and whatever it goes down, you will get the full brunt of that. But what if I told you there was a better way to control Palantir to get unlimited upside and protect and own Palantir if it goes down and own it at a cheaper price? Well, there is, and that's called a synthetic long. So let me show you what that goes by. We have to use the same expiration date to make this easier to understand. So the expiration date is 17 March 2023. If we write a put at a $7 strike, okay, at a $7 strike, we will get paid 62 cents. Now, if we buy a call, okay, if we buy a call at the $8 strike, okay, $8, we will pay 176. So we paid 176 to control 100 shares of Palantir that has a delta of 67. And that just means for every dollar that the underlying goes up, you get to capitalize on 67% of the move. And as the stock goes up, this delta goes up. But I don't want to confuse you, so let me keep on going. So if I paid 176 and I received 62, then actually I paid 114. So you paid 114 to have unlimited upside to Palantir all the way through 17 March 2023. So if Palantir is $9.14 in March of 2023, you don't make any money and you don't lose any money. But if Palantir is above $9.14, you have an unlimited amount of money that you can make going up. But oh wait, it gets better. The reason that it is better to do this, because to do this, to control 100 shares of Palantir only costs you $114. To buy 100 shares of Palantir the normal way costs $864. This way, you have unlimited upside, but there is a risk, and the risk is the put that you wrote. Remember, you wrote a put at a $7 strike. So if Palantir is below $7, then you have to pay $700 per 100 shares of Palantir. Now, if you don't think that that's going to happen, writing this put just made your call cheaper, and that's why we did it. And this is called a synthetic long, and this is the kind of things we go over in the Patreon. And I just wanted to give a quick example of it so you guys in the YouTube can see. But this by far is the best way, in my opinion, to get into Palantir. Now, notice that Palantir is the only stock that I suggested a synthetic long, and that's because I'm definitely biased and very bullish. So I'm going to take this time to go ahead and plug my Patreon. If what you're hearing or have heard is interesting and you like the way I think or I do business, then join my Patreon, the $25 level. You literally have nothing to lose. If after the first 30 days you are not happy with what I gave you, you simply let me know and I'll give you 100% of your money back. And I am always trying to add value in that Patreon. Like, for instance, I just created a cash secured put um, uh, Excel spreadsheet to keep track of your cash secured puts and help you know exactly all the metrics that it goes. And as a matter of fact, we might look into that if there's time pertaining or permitting at the end of this stream. But that's basically it on Palantir. So hopefully you guys liked what I had to say on Palantir. So now I'm going to look at the chat and see what you guys got to say. Okay, so Rich, you wanted me to say what's bad about the chart. Okay, good. You know, we will look at we'll look at the chart, Rich. I'll do that for you. Okay, so the chart on Palantir, PLTR. Okay, so the chart on Palantir, it doesn't look great, right? It's actually looks horrible because it's look how far I got to go up. Let me go to weekly because that's how far I got to go up. Actually, let me go to monthly because geez Louise. Okay. So from peak, the very, very tippity top. Jeez. To where it is now, it is de-risked. It is de-risked by 80%. Okay. So now, another thing you need to know is that it is actually below the price it came when it came to the market. So that's actually good. Palantir is so de-risked, and they are a far better company than they were here. Far better. Far better. Let me remind you guys that Palantir has been able to achieve what only two other companies have been able to achieve, and that is to get the highest possible security clearance from the government. That is huge, and that people don't really give it that much value, but they should. So, in my opinion, Palantir, in my opinion, I'm going to say it again, in my opinion, the absolute floor for Palantir has already been set, and that is That is right here, guys. In my opinion, the floor is 729. Or close to it. I don't think it's going to go to this all-time low ever again. I could be wrong, right? I could be really wrong, right? So this is where I think. So from someone who doesn't know about Palantir, this looks like a very bearish, very, very bearish growth company going into a bad macro. But again, one of the reasons, Rich, one of the reasons I'm so bullish on Palantir is because I don't think they're like any other company. I think, given the macro environment that we're going into, I think that they are going to do even better. I think when times of turmoil persist, I think Palantir does better. They're literally in the job. Their job is to make companies better. And companies will go to them when stuff really starts to hit the fan. And I'm not even talking about the government. Their government contracts are going up. I've always said this. I've always said that Palantir, their government contracts are going to keep them above water, and their private contracts are going to going to make them eventually go parabolic. So I'm very bullish on Palantir. So take that with a grain of salt. It's a very biased outlook that I have. So it is what it is. So hopefully that answered your question. Okay, so now let me catch up. Let me catch up to actually I think Chris started getting bullish on Palantir again. Here are some of the cons of Palantir. The dilution actually is going down a lot. They're actually getting better at convincing clients, Cameron, but all those are good points. Correct. Okay, AMD is next. AMD is next. All right. This is very long. I'm at an hour and a half. Okay, I'm gonna do AMD. Phil, after AMD, is there anything else? I'm not gonna do Johnson and Johnson. Is there anything else after AMD? Because I wanna for the YouTube people who are still in here, I wanna do some of theirs quick, fast. So after AMD, is there anything? Is that the last one? Okay, so let's go to AMD quick. I pretty much know that AMD. I love AMD long term, but I don't like them short term. I believe we still got more to go on AMD. I believe they just bounced off support, which is right there coincidentally. Um, and then my third level of strong support is way low down here. Okay, so basically 50% is the absolute bottom in my opinion. Now let's look at the fundamentals. Okay, fundamentals. PE ratio is decent. It's lower than Nvidia. Forward PE, they got their forward PE going down, although I disagree because I believe that chips haven't hit a bottom yet. So I disagree with this forward PE. Their price to book, they have no dividend. Their price to book is 34, so that's good. So okay, so that's good. If their price to book is 34, this quality of a company makes me raise up this. Okay, so if their price to book is $34, then I don't think that the bottom is $34 because I think that's kind of fucking ridiculous. I like 50 then. 50. I would be a buyer of AMD at $50. Okay, so if I am a buyer, oops, if I am a buyer of Nvidia at $50, that means that they would have a PE ratio about 1/6. 1/6 of 26. Calculator. About 21, 22. I don't know why I did that on a calculator. Okay, so I mean they have a PE ratio of 21, 22 at $50, and that would definitely be investable. So it's good that we're talking out these things because I've changed my tune. So there, at such, I like AMD as an investment, not a trade, and I like them at a $50 strike. So let's see what the premiums will pay. Okay, so if we go to 1 year from today, which is, I guess we got to go to January. This is more than a year. So if it's more than a year, okay, we're going to use 55. We're going to use 55. Okay, we're going to use a $55 strike, which is really close to where they're at, but we get some cushion. We're going to use a $55 strike. We're going to get we're going to get paid 952, 955. All right. That's going to give us, oh, that's perfect. Oh, that's beautiful. Look at that break even. Our break even is 45.45, meaning if we're lucky enough to get shares, we have a cost basis of 45.45. If they go up and we don't get shares, we make 17% on our money. I believe that this is a great trade, everyone. I believe that writing puts on AMD a year out at a $55 strike will either A, give you an annualized return of 17% on your money, or B, give you a cost basis of $45 on your AMD shares. So I happen to love the management at AMD. I happen to love how they do things. So I think that this for AMD, I'm not even going to do a synthetic long. Because of the macro, I'm not doing a synthetic long, but I believe writing puts on AMD is a great trade, everyone. Or excuse me, either investment entry or a extremely long swing trade, depending how you want to look at it. So, yeah, thank you for bringing AMD up. I'm glad I looked at it again. Thanks, VC. Yeah, I mean, it's just taking longer than I thought, but I have to get through this. Plus, I was late, so I really appreciate it. Those of you who are here, 25 viewers, I really appreciate you because I've always had around 25, 30 in here. So that means 25 to 30 people have been viewing me for over an hour. So thank you very, very much. I'm reading Cameron's. They don't like teal. I like teal. I like carp. So I guess like I said, I'm very biased, guys. All right. All right, my friends. That's it. I think that was it for Palantir. Were there any more? Tossed. Oh no, tossed and pins. Pins. I got to do pins. I'm gonna do pins. I don't even know what tossed is. What's tossed? Toast. The fuck is toast? Software. All right. All right. Speculative. That means I don't know the company, so I'm not gonna do. I haven't done a deep dive. $11 billion market cap. Speculative. Price of book is horrendous. Book value is according to horrendous. Okay, let's look at the chart. Ah! You want to throw up. This is really bad. Jeez Louise. Okay. Okay, well, they're oversold or overbought right now. So definitely don't buy into them right now. They have a triple top, very bearish. They're definitely going to come down. If I would actually short Toast. I'm actually going to short Toast. Phil, put in the Discord that I said I'm shorting Toast so I don't forget. Because I don't want to put them on my watch list, but I do want to short them. So put in the Academy chat that I'm going to short Toast. I'll show you guys. Yeah, I'm going to short Toast. So investment, no. Shorting, yes. They are overbought. I will cover my short at around this level. I can make about $3 on a short-term cover. So I'm gonna cover my short at around $20. Yeah. So Phil, do me a favor, put in Academy chat that I said I'm gonna short toast. All right. So don't invest, don't trade it. I'm gonna short it, but that's me. Um, okay, what's the next one? Pins. Okay, pins. Pinterest. Okay, Pinterest is approaching overbought. If you look at the RSI, you have a downward trend. You have a downward trend and a downward stock price. So they have converged. So now RSI is doing what price does. I will see Pinterest coming down to at least 2034. Let's see what their fundamentals are. So pins is at $25 basically. I could see them easily coming down to 20. Okay, this is disgusting. Absolutely not. Not investable, not tradable. Price to book is not great. This and then going into the macro that we're going into, people are not going to have money. So, no. Sorry, Pinterest is a big X on every front. No, 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 no. I'm not even going to. Oh shit. Share screen. Sorry. All right, let me show you guys what I did for Pinterest. How long have I not been sharing my screen? Did I not? Okay, so this is Pinterest. This is Pinterest. Did you guys see Toast or not? I don't think I showed you Toast either. All right, so let me go back to Toast. I'm gonna short Toast, but let me show you why. Disgusting. Absolutely disgusting. Over almost overbought. They have exceeded they have a triple top, very bearish. They're gonna come down. So that's what okay. So there's Toast and Pinterest. All right. Well, oh my God, Zach, if you've been here the whole time, you are a freaking MVP. I appreciate you. Phil, you're definitely an MVP. I appreciate you. Everyone in the YouTube, I appreciate you. We're approaching 2 hours. So, with that said, if there's anyone not from the YouTube, if you would like me to, and you're still here and you want me to look quickly at a ticker, go ahead and put it below Cameron. If you're still here, you can go first, Cameron. You got first dibs for your unyielding support to me. I appreciate you immensely. Go ahead, Cameron. Tell me something that you want me to look at real quick. Thanks, Rich. All right, Cameron must have stepped out. Anyone else wants something me to look at too? I'll give you guys another 30 seconds. If not, we'll call it a day. I mean, this is the longest call I've ever done. 1 hour and 49 minutes. So, anyone else? DE. All right, Cameron is here. Let's look at DE. DE, Deere and Company. Oh, like John Deere? Like the tractors? Okay, yeah, they're in the S&P 500. Yeah, that's who it is. All right. They have a PE ratio of 20. Uh, they have a forward PE of 15, so that's good. That means they're going to do better. They have price to sales. That's a good price to sales. Price to book is not that great, but you don't need a price to book in a great established company like this. That's okay. That's an okay price to book. Earnings per share this quarter, this year. Okay, let's look at the charts. Okay. Okay, they didn't start coming down in January like the S&P did. They started coming down from their peak in April, and they went all the way down to a low of 283, and then are now at 396. So they were a very good buy down here. They are overbought, however. So buying right now is not something I would do. If you want to invest and because you want to get into this blue chip company, let's see what a good fair value. I mean, when it's so choppy like this, right? And I want to I want to own shares, right? But I don't want to pay too much. What I do is I go down to the middle of the move. The middle of the move is around here, right? With just eyeballing it. It's nothing too like sexy. So 366. So if you want to get in at 366, which seems to be a really good level of support, right? 366. Could it go lower? Sure. I believe it can go as low as 350. So let's go ahead and put that 350 in there. Okay. So now let's look at the chain. Okay, so if I wanted to invest in them, I would put a strike price at anywhere between 365 and 350, right? So basically somewhere at 360 to 350, 758 would be a good starting cost basis, right? So now how do we guarantee our cost basis? Well, that's by the miracle or the awesomeness of selling puts. So if you want to guarantee your cost basis, if you want your cost basis to be, let's make it a nice even round number, 355, we go to the option chain. So let's go to the option chain, DE. Actually, better than the option chain, we'll use the tool. We'll use the tool. We'll use it. Okay, you want to write. And because we're going in it's a blue chip, but it has a good chart, and I think they're going to do good. I just don't want to overpay. We're going to do a January. We're going to do a January 20th, right? We'll start the year. That way, if we get exercised, we start the year owning the shares, right? Because remember, investments are for long term, and you want to own the shares whenever possible. Okay, so it's at 396 right now. I said a good price was between 350 and 360. Does John Deere have a dividend? Yep, 1.4. Okay, not great, but better than nothing. So you know what? Let's do 360 because we get 1160 for that. So if we do 360, we select it, we calculate. We need okay, so this is where you need money, right? Because this is a cash secured puts. You need $34,840 in order to do this cash secured put. Remember, this expires in January, so it's not for a full year. So if it doesn't get exercised, you will still make 3.3% in that short amount of time. That annualizes to above 10%, so we know it's a good thing, right? So this is a blue chip company that we're getting paid to do it. Our break even at expiry is 348, so that means that our cost basis is 348. So John Deere is a great stock to do if you're investing for the long term, and you can write a put on it because that's the thing. If you can afford it and you like it that much, then I don't see why not. You should not have a put on John Deere here. The chart is healthy, the company is healthy. I like it. So yeah. Thank you, Cameron. That was a good one. uh, all right. Yeah, Cameron, if you're going to increase your position and you have the capital to do it, I would definitely write a put at a 360 strike. And I was looking at the January 20th expiration. I'm going to do a deep dive on my own, not on this stream, Panko. Captain Chuck wants me to do nano dimensions. All right, this is the last one, guys, and then we're going to call it. This is a 2-hour stream, and it's crazy. So let's do nano dimensions for Captain Chuck, and we're gonna call it a stream. So if you've been with me this entire time, you are the real MVP. Okay. Oh wait, what's the ticker? It's not nano. Is it ND? What's the ticker, Chuck, for nano dimension? NNDM. There it is. Okay. Nano dimensions. No PE ratio. Less than $1 billion market cap. Price to book is healthy. Okay, so their book value is 488. Okay, so this is another company that's trading below book value, and that's really, really good. But it is a speculative company. And I've never seen something with no EPS next year. That's weird. They have the past, but they don't have the future. Maybe it's not have enough. Maybe it's not. Okay, so Nano Dimension seems to be. Listen, whenever something has a book value higher than their market cap, that's really good. That's really good because even if you take away 30% from 488, it's still higher than 249. So based on that alone, Nano Dimensions, even though it's speculative, it's still investable to a certain degree, in my opinion. Now, because it's speculative, I wouldn't, I don't throw the farm at it. Buy a call at very least. Buy a leap. If you guys want to look at leaps, let's look at leaps. Yeah, buying leap calls on something that is below book value is cheaper than buying it at the shares, but it's so de-risked at that point where it's fine. Okay, Nano Dimensions. If we were going to buy a leap, this is the only leap we can buy. So it's 19 January 2024. We want to leap. When we buy leaps, I like to buy them with at least a 70 delta. So here's one right here. Okay, you buy a $2 leap, has a delta of 77. The stock price is 250. To have unlimited upside in Nano Dimensions, it would only cost you 96 cents. So you get more than half off. You get more than half off to have unlimited upside to Nano Dimensions. And your break even is $2.96. So basically, if it goes up 57 cents from where it's at today in more than 1 year, you lose no money. As opposed to, you can pay more than double that and then have something speculative. So I believe in Nano Dimensions. I believe buying just a call, and remember, you need to do it in correlation with how much money you would spend. So if you would spend, let's say, $1,000, that means that you would buy 100. That means you would buy 400 shares. So that means if you were to spend $1,000, you don't buy $1,000 worth of calls. You buy 4 contracts because 400 shares is equal to 4 contracts. So instead of spending $1,000, you spend $400. You see what I did there, guys? You spend $400 because that's the amount of shares that you would buy to see if what you think is going to happen has happened. You get unlimited upside on 400 shares, and it's just like buying 400 shares, but you spend way less. The only difference is this has an expiration date, but you have unlimited upside. So if it goes down, if Nano Dimensions goes down to $1, you only lose 400 shares. But if you buy Nano Dimensions at $2.50 and it goes down to $1, you lose $1.50 per share. So you lose more than $500 if you bought shares. So you see the give and take and why options are powerful when used correctly. So anyway, thanks, Chuck. That was great. That concludes my very, very long stream of 2 hours. I appreciate each and every one of you for being here. I learned something today. There's some stocks that I put on my radars, and hopefully you've learned something today. So thank you for being here. Let me go to the chat really quick before I say goodbye. Thank you, Cameron. Thank you, Cameron. Okay. All right, everyone. Thanks for being here. 17 people are still here. I appreciate you immensely. All you guys have a great Sunday and take care.